2011, and this is the month of January. It is called the January effect. Stocks bought at lows in late December and early January, but often they're sold off at the end of the month or later in the year. Is it time to shift your investments, though, for 2011? Joining us now, Managing Director at Landcolt Trading, Todd Schoenberger, is with me. Todd, I want you to talk about what we expect to see. It looks like January, first trading day I know, is kicking off nicely. Do we expect a strong month? Do we expect a strong year?
A strong month and an excellent year, Cheryl. Actually, if anything, you start looking at forward earnings right now. You have the S&P 500 trading at about 13.5 times. So this is a great buying opportunity, and I think you're going to start seeing a lot of retail investors re-enter the marketplace as soon as they start receiving their fourth quarter and year-end statements.
All right, now, and you've got some picks. I want to get to those in just a second, but I got to go back to the oil story with you, Sandra, just really quick, because I know that you're going to be talking about this later on in the show, but oil again at 92. Phil just said it, Phil Flynn, strong economy, strong economic recovery. Do you see that?
Yeah, he hit the nail on the head. It's two things. It's the investor that has a growing appetite for riskier assets, so they're diving into oil and other commodities. But it's also a sign that the consumer is strong right now. We're paying right now at the pump on average, Cheryl, 76% more per gallon of gasoline than we were 2 years ago. That's not just them raising prices and the consumer looking at the pump and turning around and saying we're going to drive less. They're paying these prices. So it's also a sign that the consumer is more resilient right now and willing to pay these higher prices. So if gas prices approach that $100 mark, gas prices continue to go higher, this is going to change the overall look of this economic recovery for sure.
It also, David, will take us to the point where the consumer will be willing to jump in. Spending will go higher. That helps the overall economy. That helps the markets. That's just more confidence.
The wealth effect. As he just said, the 401k plans, all the returns are up. I mean, the S&P 500 was up over 12%. NASDAQ up almost 17%. The Dow up 11% last year. When you open up your 401k statement, if you haven't already gone online, you feel wealthier. When you feel wealthier, you spend a little more money. And that's exactly what's happening right now.
And you know what, Todd? A lot of what we saw in 2010 as far as market activity, equity activity, was specific stock picks. People were looking for specific names. They didn't want to buy the index. Maybe they should have with regards to the S&P or the NASDAQ. But, Todd, you like a couple of names. You like Apple, for instance.
I love Apple right now. And Apple obviously is the best creativity or marketing story of the decade. And when you start thinking about the iPad 2 that's rolling out in April, Apple's already releasing some clues as to what this iPad 2 is going to be like. And if anything, it's going to probably make the iPad 1 look like a 1980s Texas Instruments calculator. So if you want to be a buyer with a real leader and a real category killer type of company, Apple Computer is the obvious pick for you. And it's obviously hit a 52-week high today.
And you know what, Nicole, I know that you're down at the NYSE, but you track the NASDAQ as well. 17% gain for the NASDAQ for 2010. And a lot of the movement that we saw on the NYSE was technology-based companies. Those stocks pushing the Dow higher.
Without a doubt. We saw gains across the board. NASDAQ was the best of the three as far as the 2010 returns. You had 11% for the Dow, 13% for the S&P, and 17% for the NASDAQ. But we're kicking it off in a very nice fashion here today. Quickly about Apple. Certainly, I have to say, Oppenheimer agreeing with you today, upping their target and talking positively about iPad sales, the iPhone. So that's some good news there. I did want to quickly note about the January effect. It was a long time ago. Anybody remember January 2010? Well, on that particular month, I got to tell you, it was a losing month. We were down 360 points, which was a loss of about 3.5%. So we kicked it off last January in a very negative manner, but that was not how the year went, right? We had a winning year indeed. So it's not always how January goes, so goes the year, but we like to kick it off in a good way.
That is the old adage, but it didn't work so much, David, in 2010.
Well, the one thing, we're all talking about stocks right now, but last year was a very rare year. You had stocks go up, bonds go up, and commodities go up. So that's very, very rare. So again, if you've got a 401k plan, back to the average retail investor, they made money everywhere, and that is unusual.
But you know what, Phil? I mean, I know that you're my commodities person, and Sandra is too. I hate to say it, but I love you, Phil. And the average person is looking at, a lot of times they get fearful when they see crude ticking higher. They worry when they see commodity prices, flour, corn. When that stuff goes higher, that makes them think, okay, inflation, food prices. But it's good for the investment community. Is it good for the average person?
Well, at some point, there's a point of diminishing returns. I mean, the Fed thought it was good when they tried to create inflation by printing more money. So in a way, yes, this is what the Fed wanted. Let's hope they're happy with what they got. But if you go back to the January effect, if you go back to a year ago, remember everybody was pretty optimistic to begin the year. And what happened? We had the Dubai crisis a few days later. Then the market broke down. Then we had the Greece crisis. So, that's one of the cautions we have to put out there for today. Yes, things are looking great. Everything is good. But there's still those worries out there. There's still worries about Europe. There still may be other crises waiting to develop. And if they happen, we might get another sell-off like we did last January. But right now, things are looking really good, Cheryl.
And real quick, Todd, I know you had one other pick I wanted to get to before you had Apple and one other, Todd.
Yeah, well, actually a couple, but I think if you start looking at some of the Dow stores, the Dow Generals of the world, Dow General came out today and said they're going to hire 6,000 new people this year, plus open up 625 stores. I mean, the frugal future clearly is here, but when you look at some of those dollar stores, they actually had a 5% square footage increase last year as compared to Walmart and Target that remained flat. So that is a growing part of the consumer sector. And obviously when you start talking about some of the retailers, and then we talked about oil, ExxonMobil is definitely my favorite. It definitely should be a core holding for every portfolio.
Sandra's looking at that as well, Todd.
4 top big oil picks. The big oil companies' first 9 months of 2010, their profits were up 49% to $59 billion. They're expected to exceed $81 billion for the entire year. These are record profits. Big oil is going to be really strong to start the year.
I'll tell you, well, it's a good kickoff. Todd, last word?
Well, I was just going to say, I mean, when you talk about a company that knows who the real owners of the company are, and they know it's the shareholders, it's ExxonMobil. I mean, they repurchased over $130 billion of its own stock over the last 5 years. That's a company you might want to consider.
Todd Schoenberger, Land Colt Trading Managing Director. Great to have you. Nicole Pantelidis, Bill Flynn, of course, thanks to both of you. And these markets may be soaring, but states, cities, towns have been left in the dust, folks, by the economic crisis. Can they dig out of it? Next on Fox Business, you're watching us in True HD.